So welcome to another weekly poll. Today we're going to be talking about how you can pay off your property in 10 years or less. Okay, so this is going to be this is for the homeowners, this can be for the investors, this can be for the people that are conservative and they're investing, they want to reduce debt. This can just be for people that they've kind of hit their max borrowing, they want to learn how to free up debt, how they can use a strategy to minimize their their debt and pay off debt much faster. Okay, now full disclaimer, please. You go speak to a mortgage broker that can help you and point you in the right direction and give you the right advice tailored to your goals. Same goes with an accountant that can help you and give you the best advice from a wealth creation and tax point of view as well. Okay, I want to talk about how you can do this. Okay, it's pretty cool, something unique. Maybe you know about it, maybe not. Maybe you'd be like, duh, Frank, I already know this stuff. Or maybe you'd be like, oh my God, I just didn't think about this. This is a different perspective of looking at it. So let's jump into it. Now, before I jump into this, I want to just show you a little bit of a little diagram or analogy I just built here for you guys. Okay, let's say we buy a property at 500 grand. We buy the property at 500. It's you got a loan of 400, so you put a 20% deposit down, and you got a 6% interest rate, principal and interest. This is for an occupier. This can be for an investor, depending on the circumstances. Okay, I'm going to just talk to a person that bought this as a home. Keep in mind, interest is calculated daily, not monthly. Okay, daily, not monthly. So what does that mean? When you pay your home loan, okay, and this can be for the people that have got the family home, we make monthly repayments. Change that and make it weekly. The more you can weekly pay down that loan weekly and make those repayments weekly, the less interest you'll pay over the life of the loan. Okay, so it doesn't matter, if you pay it off monthly or you can do, if you can do it fortnightly, do it weekly. This is going to help you and help reduce your debt. So look at this. Your repayments for the year are per month are $2,414. That consists of $2,000 a month is going to interest, and then $414 is going to principal. So as you can see, 24 grand a year in interest repayments. You're only paying $4,972 a year in principal. That is peanuts. Okay, so really you're not even taking 5 grand off the home loan in the first year alone, and you're paying all these repayments. So what do majority of Australians do? They just pay the minimal repayments, put money in the offset accounts, and just let it do its thing. They don't go back, refinance, they don't increase their repayments, they don't pay on a weekly basis, and what they do is they just sit there and get complacent. So as an active investor, and just as an active, property enthusiast, this is the best way to go about paying your debt down. In this scenario here that I've just painted here as a picture, if you pay just the minimum repayments and don't do anything about your interest rate and just let the interest rate fluctuate, go up and down if it's on variable, depending on the economy, you'll pay off this home loan in 29 years. 29 years, a 400 grand loan in 29 years. You've paid $453K in interest repayments during that time. Okay, nearly as much as what you've paid for the house. Now, let's have a look at this. If you pay an extra of $300 a week, and this is depending on the circumstance, it can be 300, it can be 100, it can be 200, whatever it may be. An extra $300 a week, that's an extra $15,000 a year. Your repayments go from 2.4 to 3.3. Okay, so $3,300 basically a month. So it's a lot higher, and this is something that, depending on your circumstances, if you can afford to do that. Instead of paying the property off in 29 years, you've cut it in half and you paid it off in 15 years. Keep in mind, in this scenario right here, I have not factored in lower interest rates. I have not factored in money in the offset account as well to reduce your repayments. So keep that in mind, and that will help a lot too. So as you're paying down debt, and as your property is growing in value as well, you go back to the bank or broker, refinance, ask to lower your rate, drop your rate down dramatically. Just keep moving forward. Put your money in the offset account and keep doing what you're doing. If this scenario here, you put $500 extra a week in, it goes 400, as you can see, 4,400 your repayments are. You pay off the home loan in 10 years. Keep in mind, once again, no offset account factored in, no lowering of your interest rate during the life of the loan as well. Okay, if you've got an investment property, because this is for an occupier, if you've got an investment property, let's have a look at this analogy here. This is an investment property. This is a bit of a look of a kind of our 10-year plan that we create for clients. let's say you've got a investment property here. Okay, you purchase something at 500, 550 a week. It's pulling in. Put a 20%, 6% interest rate. Here are your expenses. Okay, give or take. Now it's costing you $2,500 a year. Okay. Now that's let me put that principal and interest. Okay, this is principal and interest. It's costing you $7,400 a year. Now, if you were an owner-occupier, have a look at this. I'll take away the rental income. Now it's costing you $33,000 a year. Okay, to hold this property. So I'm going to use this for an investor. So investors got a property. They got on principal and interest. What they're doing is they're just letting it pay itself off slowly. Okay, as you can see here. By the time it hits 10 years, the property is going to be putting in $2,500 a quarter. Okay, this goes by a quarter. Now, where I want to fast forward is, let's say the first year loan. In the first year loan, you're only going to be paying off, as you can see here, as I scroll over to this big spreadsheet. First year loan, you're only going to be paying off $5,059 off the home loan. So, how can we get around this? Let's go back to the first thing. Let's say you put an extra $15,000 onto the home loan. So, once again, by this point in time, your home loan is going to be $394,000 just by paying the minimal repayments. Let's say you put an extra $300 a week into this property. So we do that. Okay. Now, instead of your loan being at this point in time $394,000, it's going to be $379,000 because you paid off $15,000. So, what does that look like? Let me show you right now. So, as we can see, the loan has gone to $379,000 after the first year. So it's $6,000 now it's costing you compared to before. Let me just go back. Compared to before, it was 80%. It was now it's costing you less than $1,400 a year. Okay, so you save $1,400 by making those extra repayments. Okay, so really, is it something to do as an investment? Probably not, but this is something to show you as an owner-occupier how much you can smash out the debt. Okay, now let's have a look at how much you'll be saving over the life of the loan on this. So as we can see here, if we go back. Forward. There we go. Forward. We're paying $23,000 in interest the first year, paying off that $15,000 off that home loan as an owner occupier. You're going to be paying $21,000 in interest the following year, and then as you go on, it's just going to reduce and reduce. That extra $1,400 now, or whatever it is, $1,100 that you're saving on interest that year, you put it back into the home loan. Your principal payments will go up, and you keep reducing your debt. So this is kind of a way here. I might have to do a better way of explaining it or having a visual to kind of show you, but as you see the breakdown, guys, pretty straightforward, pretty simple. So as you can see in the first year, this is the second year loan. Let's say you've paid the $15,000 off, so the loan's gone from $400 to $379. What you've done now is you're going to keep paying the minimum, which is going to, as you can see, you're paying now $4,800 off that home loan for that year as well. Now that's not including any additional repayments. So if you pay an extra $15,000 or $300 a week, it's going to be an extra $15,000 off that home loan. Then of course that's going to put you in a better position moving forward year on year, and this compounding that as well. So yeah, hopefully that gives you a bit of insights, shows you a bit about how you can do this. You can do this as an investment strategy as well. Just when the time is right, really. I think it's depending on when circumstances hit with the property portfolio, how if your property has got a good yield, if the property interest rate's gone down, and you're in a better position, you can afford to do that, and that's something that you really want to do, and that's your strategy, depending on your circumstances. For me, I don't pay down any debt on any of my investments. For me, I'd like to stay in debt. Owner-occupier is a bit different. You want to smash out as much debt as possible because it's not tax deductible. And yeah, that's kind of the ways around it. But please go get your advice, speak to your accountant, speak to your mortgage broker about this, learn about this, strategize. The number one rule I can say to people is go back. First steps first. Let's go to some action points here. First steps first. Create a budget. Okay, so create a budget on what you're spending your money on a monthly basis. Pretty simple, guys. Go in here, let's get a spreadsheet, look at what you're spending per month. Food, petrol, bills, etc. Write it all down, go into your bank account, have a look what you're spending your money on. There's things you're probably spending your money on that you don't need to be spending it on. You probably got Netflix you don't even watch. You probably got subscriptions you don't even use. You probably got memberships you don't even go to. So to get rid of them, save your money. Start cutting down the costs. Maybe you're spending, $1,000, a month on Uber Eats. Get rid of that. Maybe do $500 a month. Start cutting some costs. Start putting that money towards your family home. Pay down your debt. It can be even your investment if that's what suits you. Learn about how to do this. Start being a bit strict. Now, it's not about budgeting and living on the edge and being a bit of a tight ass. No. It's about planning. Plan for your future. If you don't plan for your future, where are you going to be? Okay, if you don't know where you're going, where are you going to be? Where are you going to end up? You don't know. But if you actually know and have a vision, do this. I do this on a weekly basis. I sit there, I actually look at all my finances, put everything in a spreadsheet, and what it does as well, at tax time, I just go to my counter here. I didn't do hours upon hours looking over all my receipts, looking over all my transactions, going, what did I spend this on? What did I spend that on? On a weekly basis, go bang, bang, bang. I spend my money on this. I know what it is. If anything try to happen and I try to get hacked as well, I know what's going on. But hang on a sec. I didn't, this is my money. I didn't spend it on this. So that's another positive thing about this as well. So anyway, hopefully that gives you a bit of clarity about how to kind of pay down your debt. It's pretty simple, pretty easy. All you got to do, create a budget, see what you spend your monthly money on. Then, of course, now learn how to allocate your money much better and start putting down repayments on a weekly basis, okay? Go back to your bank, refinance, see if you can lower your interest rate, see if you can get a rate review, lower that interest rate on a consistent basis as you're paying down the debt. Try and increase those repayments by a certain amount, whatever suits you. If it's $100 a week, it's $100 a week. If it's 200, it's 200, whatever it may be. You might do it $100 at the beginning and then start to slowly, increase that. Another thing, offset accounts. You definitely can use an offset account that will help with your home loan as well. But believe me, I think it's better if you just knock out the debt and not try and put as much money in your home in your offset account and just try and pay less interest and increase your principal repayments. Once again, you do this on a monthly basis, you're gonna be paying more in interest. Do it on a daily basis or a weekly basis if that suits you. Try and smash it out as much as you can and put yourself in a better position and become debt free on the family home. Then once you've done that, you have got sky the limits. You can go out there, buy as many properties as you want, get ahead faster and quicker, and live a life on your terms as well. So hopefully this helps. Hopefully you get a bit of clarity. If you want some help, you want some advice, you want to sit down with myself and talk about your situation, please reach out. Once again, we do not charge for a consulting fee. So keep that in mind, guys. We literally we can have a chat with anyone just to help them and point them in the right direction.